Hello, everyone. Welcome to episode number 5 of Straight into Options.
Hey, hey, hey.
I'm your host, Swing Pony.
And this is Repeat Too Hard.
All right, you guys voted. And so this episode is going to be dedicated to the differences in trading SPY versus SPX. I'm sure you've seen SPX all over your feeds as of late, and there's a very, very good reason for it. So we're excited to dive into all the differences and what might be better for you to trade. But before we do that, let's get into a little bit of market chatter. How was your week, Drippy?
Awesome. This week was really good for me and trading. I had a really good week actually. I had only one losing trade and I lost
Amazing.
$30 on that trade, only $30. And I was super proud of that. And my small account challenge, which I'm doing, or not challenge, I would say is more like a small account growth thing. So it's from like 500 to 2.3k, $500 to 2.3k in 10 trading days, and we're taking only one or two trades a day on SPX. So this is a really good uh,
A great
topic.
topic.
Yeah,
Okay, so you said 500 to 2.3K, and what I love about that is that it's very I mean it's an amazing return, right? Like that's over 4x,
yeah.
but
Without any YOLO trades, all risk managed trades, and no like hold and hoping kind of situation.
yeah, but I mean it sounds like a very sustainable nice way to do that.
It is, yeah. It's amazing, and I think you don't even need to pay attention to a lot of things. You can just trade SPX or SPY, one ticker, focus on that, master it, and then you can. Once you have an edge on that, then you can expand your skill set.
This is going to be such a good episode.
Oh
SPX
yeah,
and SPY. I'm all over it.
I mean this
Um
question I get asked so much, so yeah, I'm
Yeah, and it
excited.
hurt my brain at first when I was trying to figure it out, but now I have a good feel on it. And like I said, my week was great too. I have been, for the last 2 weeks, only focused on SPY and SPX as well. And God, the level of focus that I can have doing that, because I'm normally like my dog, I squirrel here, squirrel there. Like my eyes are just all over the place. I'm pulling up different charts and looking at different plays. And the peace of mind that comes from focusing on these two has been it's been relaxing to trade.
Yeah,
And
new trader. Sorry, yeah. Sorry to interrupt, but I just wanted to focus. You struck a really good point there, and I wanted to focus on that one. Is that new traders, right? They should focus on just one name, and because of the nature of Intuit, right? The watch list culture we have is that 10 people have 10 different names in the watch list, and then you add 1,000 charts on your watch list, and everything triggers at once on your any platform you use. You just
mhm,
can't take any action because
no,
everything is going at once and all your alerts are firing. So less is the answer.
been there, done that, don't want to do it anymore. And it's
Yeah.
funny because it comes down to like a couple paradoxes. What I'm realizing in my recent trading, one is less is more. We just
Hmm.
discussed. The other is to slow down to speed up. So just being more mindful and waiting for the setups and doing that allows me to grow my portfolio better than trying to make things happen quickly. So a lot of good revelations from my little break that I took and kind of
Yeah.
easing back into trading.
So after your break, are you increasing the number of trades, or are you keeping the same as last week?
No, I'm keeping the same. I'm still trying to do less because I do struggle with consistency sometimes. Like I'll have, really big green, but then I'll have red day, and then I'll have big green and then red day. And so I'm just trying to kind of keep it small and, have green days that don't have to be massive, but they are consistent. And I can be in a better headspace because I'm just dedicating less time to the market. So I'm keeping the flow for now. I'm loving it.
Yeah, that's awesome. Yeah, this, your portfolio, our portfolio is like market too. It goes elevator, like staircase up, and if you don't follow the risk
Yep.
management, it goes elevator down. So,
Yep.
it, so you gotta have staircase up on your, like portfolio growth. If it's elevator up, you are lucky, you're one of those lucky people, and you should save that capital to learn, and then use that capital to grow it, rather than just waste it on YOLO trades.
Well, that's why I'm so big on, everybody wants to win the lottery, right?
Hmm.
But studies shown the majority of people who've won the lottery don't end up keeping any of that money. So I
Yeah.
think the same exact thing goes with trading, especially options, because everybody wants that one jackpot that's going to just like revolutionize their account. They're going to get that elevator up. But guess what? If you don't know how to be consistent on a day to day basis, you are going to blow that money. I turned $600 into 15,000 when I first started trading on
Hmm.
FSR options,
Hmm.
Fisker. Um, yeah, I just took weeklies. I got lucky. They had a PT upgrade. Guess where all that money went? Market tuition.
Oh my, yeah.
But that's what happens, you know?
Everyone relates to that, and I've been there as well. So I think after the whole meme stock bubble burst, according to Bloomberg, um, and CNN as well, most of the retail traders who won a lot of money um, in the last after the COVID, surge, all the gains have been wiped out, and they're back to break even, or even now their account is lower than what it was. So it's not just one person, it's just almost everyone is like that.
Yeah, I can only imagine. And the last thing I'll say on that is I think we all went from things happening so quickly to experience that level of the market that we did, where you didn't have to try that hard or know that much. And you got lucky more often than not to a market that is very, very humbling. This is where you have to remember that you're playing the long game. The get rich quick mindset is not going to work here. So, for everyone who's still stuck around despite the hardships, despite the losses and whatever, and is maneuvering their way through this market, cheers to you. Like,
Hmm.
you're going to get it figured out and it's going to be sustainable and it's going to be amazing.
Yeah.
Um, Moving on, though, we did have quite a big week in terms of macro. I know the US dollar hit a 20-year high on Thursday. And anytime, the DXY, the US dollar index, goes up, that puts pressure on the markets. Can you explain a little bit about what the relationship is between the dollar and the market?
Well, so relationship is ever changing with dollar in the market, so we need to put into context a lot of different things. So without going too much in depth, I want to talk about, so dollar increasing right now is a concern, because first, everyone is parked in cash. Nobody's spending cash on the market, so liquidity is tight in the market right now. And so that's one reason. But why dollar is rising, and the effects of that are on the trade deficits and the global imports and exports, because because the dollar value is high right now. The main issue is that all the other currencies are much weaker, and because of that, the commodities are suffering. The commodity prices are suffering, and you can see from their charts, for example, XCLF, they were just ripping Alcoa, and now they're down big. And the only one actually is surviving, which I'm actually surprised, is oil. And once dollar cools off, oil is going to take off, because commodities suffer because of, again, import export duties. And on top of that, we have trade deficits, and on top of that, exchange rates for the companies. So in a high dollar environment, companies which import, they do good, but the exporters, they don't really do that well. So, and this is also creating adding to the inflation um, in other countries as well, is because now their values, their currency is not that strong, so now they need to park their money somewhere else, right? And where do they go? And this has been a major issue for a lot of companies, a lot of investors, that where do I park my money? And it's dollar right now, and treasuries, United
Y-
States treasuries.
Yeah, I mean, I was even looking at like the USD to euro um,
Hmm.
exchange rate,
It's
and
almost same right now.
it's almost 1 to 1. And I'm
Yeah.
I'm looking at maybe going to Europe for a couple weeks later this summer, and I'm like, maybe right now is the time before the dollar pulls back to to go in there and do a little bit of an exchange and save. I mean, that's like a 15% saving, you know,
Hmm.
to have my dollar go further in Europe. And that can cover, obviously we're in the perfect storm of inflation and other costs going up. So my flights are going to be more expensive with airlines, raising their prices about 25% to
just
accommodate the
just 25%, by the way, month over month.
just just 25%. It's not much, guys. Um, yeah, so I think we kind of have a perfect storm of stuff going on right now.
Yeah, yeah, it's definitely a concern. And then US Treasury is also are really high. um so 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 let's see. I mean, it does help federal government if dollar value is high. It decreases the inflation, because it's how they calculate it. But um it doesn't really help the market right now. Right now the market is suffering because dollar is really high.
Yep. Yep.
Yeah.
And we did get a little bit of a green day on Friday. We
Yeah.
gapped up.
I was swinging calls, so I was happy about that when it gapped up.
Amazing.
Yeah. Yeah, we were
Um,
we were at very tricky spot, right? 20% down. If or roughly 12% of the stocks on the whole market were above 50 moving average, only 12%. So it was Hail Mary time. If it doesn't bounce, this is it. And we had the 4,000 level, right? It went below 4,000 on
mhm.
Thursday, the SPX. And that looks bad for the market. I mean, all the investors and the interested parties. I mean, this is US stock market, SPX down below 4,000 for first time, right, in a while. So it was thing of a concern. So my idea was that at least it should retest 4,000. If it fails again, then we're heading down.
Yeah, no, I think we were due for a little bit of relief. And I think, again, it's just a reminder in this market that it's very easy to go doom and gloom when you've had a few red days. I know we had a lot of them, but especially in a bear market, there are counter trend rallies that can absolutely rip your face off. And so I think it's really important to adapt day to day to what the market's going to bring because I've had times where the market starts to reverse and it goes green and I'm still in bear mindset and I'm looking at like where can I short it? Where can I short it? Instead of the opportunities where no, I can play calls here. It's okay. I can play calls here. So, adapting with that reminder that a bear market isn't just going straight down, I think is super important.
Yeah, unless you get into a really good position and you can swing it. This is not really a swingers market. So take your profit, close them, and then move on to the next day, unless you're short coin or micro strategy. uh
Yeah.
you can
Well,
you
okay, speaking of, can we talk about Luna?
Oh my, the market cap of Luna plunged from $18.65 billion to $1.8 billion in 1 week.
It's insane. I saw somebody posted something like if you would put $10,000 in Luna last week, it would now be worth $2.
It's
And
funny because I actually had some UST because I use it to buy another crypto, right, in my
mhm,
another leveraged brokers. And I actually cashed out of crypto last to last week when before this plunge, because as soon as I saw that the bear flag breaking out, and given these market conditions, I was like, no way, I don't want to be in crypto.
for
So I
sure.
transferred almost $100,000 out of my account. And I feel lucky because I would have been my account would have hit big, it would have been down big. And
Beautiful
just
timing.
yeah, and I mean, I regret that I didn't short it, because that was my plan to actually transfer that money and use that to short. But I just missed the short.
Yeah. No, that was brutal to look at. We'll see if, the market recovers a little bit in the coming days, if we do get a bit more of a bounce in crypto. Um, hard to say though. Um,
Yeah,
s-
it's
some
hard to
other
say.
stuff. Yeah, it's very hard to say. Even I know Friday at one point the market was rallying, but crypto was still going down, and I thought that was an interesting disconnect. Um,
Oh
so we'll
yeah, so
see.
that was also a weak rally in the market. If you notice, right, we were just struggling to chug along on Friday,
Yeah,
and it was
yeah.
like a rug pull is coming, a rug pull is coming. Everyone was telling me, on my Discord is like, feels like rug pull is coming. And guess what? It did come. We had a pullback, after noon, and then it started to rally again around 2 o'clock.
They wanted to trap everyone on Friday.
Oh yeah, Friday was a massacre. That was
Bulls
my
and bears.
Yeah, that was my first losing trade of the week. I was short earlier than expected, and I was trading zero DTE, so I took the my loss 30% on a dollar contract, and I got out.
Yeah,
And
it was a tricky one.
mhm.
Um, in terms of macro events, the other thing that we're looking at right now, I know we're dealing with a lot of food shortages, and you've
Oh
been
yeah.
eyeing wheat.
Hmm. Yeah, so India, so this I actually tweeted this before India banned the wheat exports, that we are really having big shortages of food. Food inflation is becoming a big issue in a lot of countries, and we have riots in like Sri Lanka because of this. And on top of that, they cannot even feed domestic. They cannot um, even satisfy the criteria for the domestic level, and let alone exporting. And for India to do that, it makes sense at this point of time, because heat is just damaging the crops. It's the same in Texas as well. So I was like, it makes sense to kind of go long on wheat names right now, because they will offer they tend to rip during these kind of situations.
Well, and I know that Ukraine and Russia also account for a third of the global wheat and barley exports.
And
So,
they cannot because of the war.
yeah, so that's huge. And I know they also produce a lot of the world's fertilizer supply. So,
Hmm.
there's a big trickle down effect that's going on. As if things weren't already more expensive due to like fuel and supply chain issues, I really do feel like we're dealing with a perfect storm of a lot of things coming to a head right now. So, we'll see where
Yeah.
the market continues to take us.
Yeah, it's really bad situation in Germany as well, um, because they rely on natural gas and Russian oil, and 70% of their energy source is coming from there. And since the pipelines are now closed, the inflation in Germany is just next level. The finance minister came out and said they are in recession.
Oof.
They're beginning, so it's bad. A country like like India telling that we are banning the wheat export, it just adds more pain to the food scarcity.
Yeah, absolutely. And I know there's baby food shortages as well, like
Yeah,
formula. Been
yeah,
reading about that. So there's a lot going on in the world right now, and we're just gonna, have to kind of stay on our toes and see what happens.
yeah. And speaking of shortages, we don't have shortage of Fed members. We have Jerome Powell got reelected again. He got reelected again.
JPow.
Yeah.
Yeah.
So now he's back.
The ultimate meme leader of the Fed, JPow, who says fuck your puts and fuck your calls.
Yeah, so I mean, I don't know if market will take this as a positive news or a negative, because from one perspective we think that if he's reelected, that means there is less uncertainty in the market, and that's what
Sure.
market likes.
Yeah,
So
market doesn't like uncertainty at
mhm,
all.
right, so let's see what happens. But apart from just the US, we have China economy in shambles due to lockdown and Shanghai. And we have export growth in April in dollar terms slowed to 3.9%. But a lot of people are actually saying that, but dollar is also 104 and yuan depreciated. So this number actually declining or increasing. We don't know if they're actually exporting more now. And I'm reading some more reports that they're exporting aluminum now as well. China was a major importer of aluminum, and now they're net exporting it. So I don't know what's going on there in China, but definitely seems shady.
Stay tuned, folks. Okay, are we ready to dive into SPY versus SPX?
Yes, let's go. So,
Okay.
number one question: what is the difference between the two pony? Explain
Okay.
like I am one.
Explain like I'm one. You don't even understand English at one. I'll explain like you're five.
Okay.
So SPY is an ETF, and it tracks the S&P 500 at almost 1/10 of the value. So SPY is an ETF. You can trade shares of it, and it reflects the S&P. So the SPX is an index, and that has weighted prices of the securities in the S&P 500. You cannot trade shares of SPX.
Right, but you can trade options on them, which
Oh,
makes them
yes, you
really good.
can. Oh,
Hmm.
yes, you can. And, one of the key differences in trading options on SPY and SPX is the way that SPX is settled because it's different than SPY, right, Drippy?
Yes, the SPX is cash settled. So what that means is that if you go in the money, let's say you purchased a 400 call on SPY versus a 4,000 call on SPX, and you go in the money, let's say SPY goes to 405 and SPX goes to 4050. Um, so once you go in the money for a SPY, you need to, like you need to exercise that contract and you need to buy the shares. But for SPX, it's cash settles. What it means is that whatever the difference between the strike price, so in this case, for example, it's 4050 minus 4,000 was the contract you chose. It's 50, so you get 50 into 100, so $5,000 for the contract, and you'll get it next day. So it's cash settled. You don't have to purchase anything. You don't have to exercise it. So it's awesome that way.
And that's what I really like is that there's no stress when you're heading toward like the final seconds of the bell. The
Yeah,
market's about to close. I don't have to try to exit out of this position real quick. If I'm in the money, it all takes care of itself.
yeah, that's actually the really solid benefit, because sometimes you just close your position a minute before, and next thing you know, it's up more 200% because it ripped.
Mhm. Oh,
So
that final minute is a powerful one.
and SPX can help with that in that regard. So but it also it can be detrimental because things can go against you real quick, because the point increments are 5 point increments on SPX on the strikes, and SPY is a 1 point increment.
And sometimes I do appreciate with SPY getting that extra 15 minutes to close out of a position.
Yeah, so SPX also has that, except non-expiration days. So now, since we won't have that, so I think we will not be able to do that. Yeah.
Well, so that brings us on to the next thing. So
Hmm.
SPY has 0 DTE options on Monday, Wednesday, and Friday. SPX used to be the same, but part of why you're seeing even more conversation come up about SPX is they just recently added Tuesdays. It's been a few weeks. And as of this upcoming week, we're going to get Thursdays too. So Monday through Friday, 0 DTEs with SPX are going to be available. And this is incredible because we like 0 DTE
Yeah, more money to
SPX.
lose in the market.
Well, it's we wanna do it right, so hopefully more money to make,
Yeah.
but we'll get into some strategies and stuff later that don't make it a total reckless, degenerate type of trading.
Right. So I want to tell one thing though, is that SPX actually, it's a global, you can trade it 24/7, which CBOE claims, but not a lot of brokers support it. So this is
Okay,
something I need to dig deeper into, is to find out how to do it. But on the CBOE, at least they say that it's 24/7 tradable.
okay.
Yeah.
And then the one thing that people notice right away with SPY and SPX is the cost of the premiums, the difference
Hmm.
there. So if you'll remember, we mentioned earlier that SPY is an ETF that tracks the S&P 500 at almost 1/10 of the value. So SPX contracts are going to be 10 times more expensive.
Right.
But one of the benefits of trading them is, let's say you want to trade SPY. Theoretically, 10 SPY contracts could become the equivalent of one SPX contract, if you're
Hmm.
getting this a comparable strike price. But if you get 10 SPY contracts, you're also going to have to pay commission 10 times on those 10 contracts. While with SPX, you only have a single contract that you're trading. So there's a lot of room to save money on commissions.
Right. And also, apart from that, on 0DT's day, um, SPX premiums become almost as cheap as especially in the last hour of the market, as cheap as SPY premiums. If you choose the right strikes, you can almost get comparable premiums, and if it goes in your favor, the returns on SPX are just
Ooh,
exponential. Yeah.
yummy. Yes. Yes, and, on that note, I do wanna mention actually, I'll mention that later. I'm gonna talk about the profits later.
Hmm.
But, yeah, I think a lot of people when I first started looking at SPX contracts, I was like, "How am I supposed to afford this? This is like, you know, $1,000 a contract, like, on the low end, like, it could go so much more, but, if you go further out of the money and if you wait towards the end of the day where you can get a sweet deal on some premiums, it
Yeah.
can be just as affordable as playing SPY.
Yeah, I mean, in last 4 weeks of trading SPX only, which I'm doing it for the small account growth, and SPY and SPX basically, I haven't paid any contract price more than 2.5, $250 for any of them,
Amazing.
and that's how I'm managing the risk really well, and it's working. So I don't think it's impossible. It's just you need to find a strategy which will work.
And then I wanna talk about the spreads, the difference in the spreads between SPY and SPX, because that's one of the things that I've noticed. The spreads on SPY are a lot tighter. So when I set
Hmm.
a stop loss, a market stop loss on SPY, I'm not I'm not getting a fill price that's significantly lower than what I set. But with SPX, it can be a little bit of a different game because the spreads are wider. Do you have any, like, tips or tricks to circumvent that?
Yeah, so I usually put anything around the bid price on SPX or below the bid, because often, like anytime I want to enter into the trade, it does fall like at least 20 to 25%. So I just set the bid usually around 20 to 25% below what the current ask is or bid is, depending on that. Um, and it works out pretty well for me. And you don't need to chase. The biggest mistake I think people make with SPX is they'll buy the ask, and that puts you in a losing position immediately.
Yeah, no, very well said. Very well said.
Yeah.
And then one of the other huge benefits to playing SPX instead of SPY is the tax treatment.
Oh yeah.
So SPY is going to be taxed as short term or long term, depending on how long you hold it.
Yeah.
Knowing me, knowing you, knowing the majority of us, we are whipping and flipping and doing short term gains,
Yeah.
right?
Most of us are day traders, so we just it's a short term
Hmm.
gain, and that will be taxed at whatever you make at the end of day, depending on your income slab. I think.
Whatever bracket you fall under.
Yeah, so if you are in, let's say, 100,000 bracket, right? So you'll pay a marginal rate of roughly 25%, 24%.
And then with SPX, it's actually taxed differently. So 60% of what you make is taxed as a long term gain,
Mm-hmm.
and then 40% is taxed at a short term gain. So, Drippy, I think you did on the math on like
Mm-hmm.
what $100,000 worth of profits would look like. What's the
Yeah.
difference?
So let's say that you only from trading you get $100,000, and that's your net income for the year. And in one case you only use SPX, so you'll be charged $18,600 for that, for a single person, not for family. Like as if you file as a single non-married person, and it's same thing as in the other case for SPY or anything else for that matter, Tesla, Nvidia, you'll be paying $24,000. So these are rough estimates based on the current price. So it might vary based on your state, but roughly you're paying basically 30% more in the other case. But SPX, you're paying 30% less.
I mean, that's a significant number.
Yeah, if you're making, let's say, $1 million on that's three hundred
That's
thousand
not chump
dollars.
change.
Yeah,
Yeah, that's a significant number.
yeah.
So, these are some of the technical differences between SPY and SPX. And we're going to get into some, quick tips and strategies on how to navigate SPX. But one thing is, we do get a lot of questions on which platforms that you can trade SPX on, and we'll share a little chart to our Twitter feed, which is at straight into options, STR8 into options, and you can, get a breakdown of which platforms allow it and what that looks like.
Yeah, I get this question asked so many times, and hopefully
It's
that
tricky to find. It's a little tricky.
it is. And personally, I think Fidelity is really good for SPX because um, they allow trading at 0 DTE, they allow trading it until the close. Their fills are fast, and they allow trading SPX options from 7:30 a.m. to 9:15 a.m. I don't think any other broker does that. So I use Fidelity Active Trader Pro personally for trading them. And there are other brokers like Interactive Broker is very similar. I don't think they have the pre-market hours trading, but everything else is same. TD Ameritrade is same. E-Trade, Tastyworks, TradeStation, they all offer. And it's just you gotta ask them, your broker, how much fee they charge and stuff like that.
And what about Webull? Because everybody wants to know about Webull.
Webull is not a broker. Uh, yeah, don't use it, please. But if you are, it's fine. For Webull, you can only do it on the mobile, and the ticker is SPXW. That's how you can search it. But you cannot do it on the Webull web or the Webull desktop app.
You just answered 500 people's question because I know
Yep.
it always comes down to Webull. Okay,
Yeah.
now, one of the most important questions is, okay, we understand a little bit about SPY, we understand a little bit about SPX, but which one is right for what kind of trader?
Yeah, this is an excellent question because it depends on a lot of factors. So, in my opinion, some of the major factors are, SPX is bigger, since it's 10 times roughly more the premiums, right? It's better for account sizes which are bigger. And for SPY, this small account is really the way to go for small account holders to trade SPY. But saying that, you can trade SPX with a small account using my strategy. And that's what I have to say with respect to the account size. And what about the next point is, if you are trading high beta names like Tesla, Nvidia, I don't know if you trade them. Do you trade Tesla, Nvidia?
I trade Nvidia. My experiences with Tesla have been a little bit hit or miss. When they're
Mm-hmm.
good, they're good. When they're bad, they are bad.
Mm-hmm.
So I don't do much with Tesla anymore.
Yeah, so folks who are comfortable trading in Tesla premium because they move a lot, right? Nvidia premium can move a lot. Um,
I do like Nvidia. I trade that one often.
right. So then SPX is right up your alley because it offers that kind of volatility, and also since it's zero DTE every day, starting next week, sky's the limit as long as I'm concerned. If there's days trending and you get a really good entry, you can make a significant amount of returns for a small amount of risk.
Yeah, and I think the 0 DTE rules that we've explained in other episodes still apply here, right?
Yeah.
Because there is such a huge, it is 10x of SPY. So the potential for gains are like astronomical. But if there is greater room for potential gains, then why would you take a massive position size in it? Because the idea should be to put forward less capital and be able to grow it into something bigger. So, with all 0 DTE situations, just be mindful of the amount of size that you're putting in and only
Mhm.
stick to the position size that you have agreed upon with yourself.
Yeah, I like to remind people that when you're trading SPX, just think about it this way: is like someone is putting you on a gunpoint, and you have to trade it in that way. Like you need to
Oh,
be
no stress,
profitable.
guys. No stress. You're
No
at
stress.
gunpoint, but if you survive, you'll be rich.
But the idea is that don't get into a trade unless it's a high confidence for you.
Yes.
Yeah.
Yes, and here's one thing that I will tell you guys. I used to trade SPY all the time. SPX has been newer for me. I am very enticed by it, and Drippy, that's been a lot of you and how much you've talked about it.
Hmm.
But here's one of the things I'm going to tell you right now. If you're going to trade SPX, you have to eliminate any thought of woulda, coulda, shoulda. Because here's what's going to happen. And this happened to me last week.
Hmm.
I I think it was Tuesday. I was playing 40-50 calls and they ran from I got in at $1.40 and they ended up running to $12. $12. Okay. Do you know where I got out? I scaled out very modestly, like a good girl along the way. My last contract I let run just under $5. Okay. And I locked
I
and
mean,
it
that's
went to
insane.
12. That's
Yeah.
great.
Yeah.
That's great. But I had a moment where I looked at the fact that it went to 12 and I was like, "Oh, man." And I was like, "Nope. Snap out of it and make an agreement with yourself that you are never gonna say, 'Oh, if I'd only held on,' because if you trade SPX, you're gonna deal with that quite a bit. But you know what? The more important thing is locking profits and understanding now that we have Monday through Friday, you get this opportunity every single day. So we're not gonna woulda, shoulda, coulda this shit. We're gonna lock our profits and we're gonna take the next trade."
Yeah, 100%. I think that's a really good point you made. And woulda, coulda, shoulda account is $1 million, right?
Yeah. That
And
serves no purpose. It just
yeah.
distracts you from the next opportunity.
Yep. And so g- another thing to consider is that if you have a bigger account size, you could actually sell SPX options, during the dull hours of the market from 11 to 3, depending on, where the market, what kind of day it is. It's choppy day, it's a range day, and you can actually make a significant amount of, money every day, just like 10%. Using this strategy as well, you can just sell contracts, and you don't even have to worry about time is in your favor that time, right? Because 0 dt every day, so time is working for you, not against you. So I think it puts you in a really good advantageous position. And if you have, let's say, $100,000, you can make 10% of that, uh, just putting in one trade, with the risk of 1 to 1 risk reward. It's pretty good.
Amazing.
Yeah.
Amazing. Now, the most important, not the most important part, but one of the things I'm sure everybody's excited to hear about is how can I make SPX a low risk, high reward strategy? Drippy, I know you've been doing the small account growth challenge, and this has been not challenge, strategy.
Mhm.
I know this has been a big part of what you've incorporated. So, what are some tips to get into SPX, at a price that's not crazy and to be able to see some of those big gains?
Right. So first, it's impossible to cover this topic on a podcast. So I will
It's a
just
whole
give.
episode. Yeah.
Right. I mean, it needs video, because it's just, you need to go through some visual analysis for it. But apart from that, uh, we wait for the last hour. The main 3 points for me is that I wait a lot to get cheaper premiums, because when market opens, these premiums are already expensive, right? So theta is going to work against you if you hold them too long. And if you get in earlier, especially if you have a larger account, take profit. Keep taking profits. But as we approach towards 3 o'clock, and that's where the dull time kind of starts to, start to get more volume and more volatility in the market. That's where I like to pounce, because then the theta has already killed those premiums. And now what I do is I'll just wait to find key patterns, right? Support resistance areas, like, double top, double bottom, or break of a flag, anything which I can see. If I don't see, I don't get in. And then what I do is I just try to find the best possible entry, and I go out of many calls or out of many puts, and I try to keep per contract price less than $1, and keep it, like a tight stop. You can keep 30%. I like to keep it 50%, because I'm only losing $50 to potentially make 500. So that's 10 to 1 risk reward. And given all these factors combined, and looking at the price action, and let's say if your win rate is somewhere around 70%, then this can power your account for a long time.
Yeah. And I think the low risk, high reward, like the low risk part comes from you're getting premiums that have been eaten away by the theta decay,
Hmm.
right? And
Hmm.
you're getting them in at an optimal sniper entry. And you're not putting in a massive position
Yeah.
because, like you said, Drippy, that one single contract, that one, let's say, $50 contract even could end up running
Hmm.
to $500.
Right.
And at that point, amazing. I
Yeah.
had one contract and that's where it went. I didn't need to buy 20 and risk that not happening because that's not going to happen every time. Just be
Yeah.
smart with your position size and snipe that entry.
Yeah. So if so you always have to think about the balance between the risk reward and the probability of success of the trade. So if the risk reward is, for example, risk is low, reward is high, probability is low of that winner. So you
Mm,
don't want to put in a big size, because if it's a low probability trade, even though you have all the ingredients there, right, even though you have good pattern analysis, good everything, the probability of winning is still low. Um, so that's why you put the size low, and if it works in your favor, that's awesome. But if it doesn't work in your favor, you'll lose a lot of money for your account. Like for example, in this case, you have a $500 account, you put a $50 trade, and let's say you put a 50% stop loss, so it goes to $25. So the other day I had this trade which I put for $50, it went to $25, around $30, and then from there it went all the way to $4, so for
whew.
$400. So putting that amount of risk from $50 to $400 is just insane return for me, and that's what I like, because I am not spending a lot of capital on it. But as your account grows using this strategy, you can definitely incorporate some more tools, like add a little bit more size, but then scale up. Cover the cost basis
Yeah.
and then let the runners run, which you did. So um, that's something I think we need to talk about in detail later. But apart from that, I think as a general idea, this is the strategy.
Yeah, so guys, we discussed all the differences between SPY and SPX from a technical standpoint, some of the strategies that you can use to make SPX low risk, high reward.
Hey, I think I lost your audio there for a second. All right, we'll get her back, folks. But I think this was anyway the wrap for us in this episode, and I think she is having some technical issues. But apart from that, you know, uh, just apart from everything else we have talked about, just manage your risk. This is the most important thing. Every time I try to tell, manage the risk, and everything will be fine. And if you are interested in learning about this strategy, if you are interested in learning about options in general, we'll link a workshop forum. Just fill that out, and sometime in the future we'll reach out to you guys. And apart from that, subscribe on YouTube, rate us on Apple Music and Spotify. And we have 1 day remaining for the giveaway, my Discord access for a month. And all you have to do is just like the post which is pinned tweet on the Straight Into Options Twitter account, and comment on it, and just follow the instruction on the pinned tweet, and you will be good to go.